Ira Epstein of Linn and Associates with your metals market wrap up for this Thursday, the 14th of May, 2019. We're about 4:37 in the afternoon. Mixed day in the metal markets. Copper not much of a bounce, even though you got a bounce in the stock market. This market's probably now one you got to keep your eyes on. The pros might want to come in each rally until a U.S.-Chinese deal is done. Nothing too appealing. As you look at the energies up a little bit, but the API numbers late in the day took these markets down. You were about 30 higher in the last trades of the day. Nothing like these numbers as you saw too much of a build still. I'm talking not a draw. Well, the draw wasn't as big as you were looking for. They were looking for about a 4.5 net million barrel draw. They got nothing like that. Grain's a strong day today. So let's take a look. On the weekly chart of closes, all you're doing is climbing up in an upthrust towards that 18-week average, 1298.20, where I'd expect to see resistance. When we come to the June gold daily bar chart, came up in the first day where we're getting a little bit of a break in the market, but the trend is up. These lines right here are a swing line. This is a chart without it. This is the swing line. You still have the pattern higher lows, higher highs, and until you take out 1282.40 on the current pattern, the market stays bullish. What about these numbers? Yesterday we were talking that it's interesting how the market went up to the 100-day average, sort of ran out of steam. You rechecked it again today, and the market pulled back. When I put the Bollinger Band numbers on, and I'll come back to yesterday, you closed over the Bollinger Band, making a run for, you just missed hitting the 100-day average. You certainly hit it today, and then by day's end, the market came back and settled under that Bollinger Band. So the market is still not saying it's ready to lift off and go anywhere, and because of the stock market rally today, where you made back about a third of what it lost yesterday, what happened is maybe some of the safe haven buying came out. In momentum, you are plain overbought. So I've got a trend that's up, bias that's up, a market that's hit the upside targets, and it suddenly became overbought. When we step over to GLD, it's the same pattern, or is it? Not quite. You have a lower low and a higher high. If we take a look yesterday, I don't know if I can get to that. The way that this goes, probably have to come back one time. There we go. We closed over both numbers. Today, you came in checking them again. By the settlement, you were finished at 122.46, which is right by the upper Bollinger Band and the 100-day average. It's still a dime over it, so the market's still over both. The question is, can it push out of here in an overbought condition? In GDX, the market is sitting in an uptrend. It's got higher lows, higher highs. The settlement price today at 2084 is over the 18-day average of closes. Only closing back under 2027 would negate the pretty picture in this chart pattern so far. And momentum is up, bias is up. Resistance zone right above us. What's happening is this Bollinger Band is falling pretty much each day about 15 points. So I'm going to look for that market to be around 21.25 tomorrow at a stronger resistance point. Gold-silver ratio has soared from 85.5 ounces up to 88, so it's giving back a little bit of that. Silver market stepped out of a downtrend as defined by lower highs, lower lows today, but got nothing going on the upside. You now have a higher high, a lower low, resistance still the 18-day average of closes, and momentum just flat in the water, not leading price anywhere. In the copper market, the two parts that make up the slow stochastic are both under 20. They were under it today. They were under it yesterday, not the day before. So tomorrow's an important day. If it embeds and stays near that Bollinger Band, it's what we call hugging that band, and you could be pushing into another low level. Nothing bullish is what I'm saying. In the platinum market, you're oversold. That's number one. The pattern is down in terms of lower highs, but as I pointed out yesterday, you've got higher lows. The market's gone flat. It's sort of doing this, narrowing in, not going anywhere. The palladium market has got lower highs, lower lows. You'd have to get through 1353.90, and then if you can close over the 18-day average of 1357.50, I could say the market's in an uptrend, higher lows, higher highs, bias up, and probably momentum up. That's what the bears have to fight if they want to keep this market from turning up. The bulls, that's the battleground for them. In the dollar index, to me, this rally's just back towards the 18-day average. It's not proving a darn thing. The trend is still lower highs, lower lows, bearish. You're correcting a bit of an oversold condition. If the market doesn't succeed in stalling out against the 18-day average and gets over 97.49, this pattern would still not be bullish because you'd have a lower low, higher high. You know, you see me talk all the time about these indicators, and we've put together two brochures, volumes 1 and 2, if you will, on Guide to Technical Indicators. And it covers everything from the charts, the chart patterns. You're going to see trend lines, how they're drawn, what they are, how do moving averages work, how do people use them, the different oscillators, not just slow stochastic, MACD, there's others in there, RSI, Dow, Elliott, Gann theory, price and time relationship. A lot of people like that one. And of course, an options primer to go along with everything. And finally, money management. How do you get both of these? Because they are free. All you need to do is go to our website. You'll see a carousel of free offers. Click it. You can call my staff. They will help you. It's that simple to give them a call. Click up here and they'll go right to our front page. I'm Ira Epstein. You have a good day.